If your income comes into one bowl, why not you start separating them now? For example, if you start separating one bowl and you call it, this is for the purpose of savings. Let's say 10% of this bowl. So 90% will go into this bowl, 10% will go into for savings, for example. Another 10% will go for example, insurance. You want to cover in case of emergencies, medical emergencies, out-of-pocket expenses, you have insurance. Another 10% will go into another bowl, which you call for emergency expenses. Now, of course, you don't need so much for emergency expenses because if you buy and bought the correct insurance, you wouldn't need to have so much of that cash flow. But of course, the recommended will be 3 to 6 months of your monthly income. And of course, that's where you start segregating in different bowls. So if you have a different bowl, for example, for insurance, for savings, and also for a lifestyle, or even if you have an extra bowl, that should be purely invested and saved. And so that's why financial discipline is so important, to have the accountability. And that's why sometimes financial products are good.